catastrophic happens, the market slips, but we don't even want it to go too far down because the more lower your rates are, I mean, you run the risk of what is it? Hyperinflation, right? Either way, man, but people are staying longer.
For millions of Americans, the housing market feels stuck. And that might be because it is stuck. Americans are staying in their homes for the longest time in a quarter of a century. That means that people are not upgrading, not downsizing, or even relocating or moving. And it's not because of nostalgia, it's because of simple math. Millions of homeowners are not eager to trade their 2% and 3% mortgages for a 6% and 7% mortgage. Also, in pricey coastal and northeast metro areas, it's worse. Ownership tenure is pushing into the double digits.
Check that out. Maine, well, that's Massachusetts, 13 years. Connecticut, 13. Cali, 11. I know Cali's 11. I'm surprised Cali's actually this low. I would expect California to be more towards 15 because I give you a perfect example. I got someone in my neighborhood who moved from California, family. They legit paid out of cash, paid cash for the house in our neighborhood. And damn well, some of these houses are 300, 600, 500,000. They paid cash for this mug. They paid cash for their house off of a two or three room bungalow in Cali. I mean, no, they have no lawn. Now you got a big giant lawn. The house literally was less than 1,100 square feet, probably 12. They went from not even 12. I think he said between 1,000 to 1,100, and now they're sitting at a 4,000 square foot house, probably a little bit bigger. Just sold their house in Cali and just did that. See, people, when we start realizing that we control a lot of this stuff, we buy stuff and we do shit simply because we want to do it. If we can think ahead, to me, that was brilliant. He was brilliant. Now, I don't like the guy, okay, because he's an ass, but he still made a brilliant move right there. A brilliant move. Switch coats. Take your money, your equity, and leave with it. What's that? Rhode Island, 11 years, 10 years. Washington, Jersey, 10 years. Oof, Jersey, come on, bro.
It's keeping buyers on the sidelines. Anybody got a bright spot?
I just bought in South Carolina.
Well, I don't want your personal anecdote.
It's wonderful. People sold.
I'm doing great.
Yeah, and guess what?
I have a bright
the housing
spot for you.
market is softening up down there.
Yeah.
Okay, I think that's the right spot.
And I think when you talk about New York, California, even Connecticut, I live in Connecticut as well. There's all sorts of reasons why people aren't bailing on a 2% mortgage. If they got what they've gotten, they're paying pretty high taxes. It's hard to really move those houses. Who wants to move to New York City, really?
But let me throw this data point out there. I don't think you mentioned this, and this is from Realtor.com. For the first time since 2020, the share of U.S. homeowners with mortgage rates of 6% or higher exceeds those with rates below 3%.
Right.
Yep. So I'm not saying that's
We're
good. If you got
getting
a 6% mortgage, you're not happy. But what that says something about the market. It means people aren't holding, like 6% mortgage is something you hold on to with dear life. You're willing to do something with that.
Yeah, really. If we compared this to what it was like before Obama's time, going back to Clinton and earlier, I know my parents were paying mortgage rates close to 14, in some cases 18%. That's why I say we're spoiled right now. We really don't see what they went through before us. Now, granted, they had massive appreciation. I think the house I grew up in Philly, my pop bought it for like $25K. Now, him and mom get divorced. She get it. She sell it. Damn. But that same freaking house is worth about $425K in Southwest Philadelphia. Could have easily paid it off. Could have kept it as a rental. Could have stayed in the family as an asset. Just didn't exercise the wisdom to actually bring that to pass. So when I look at what we have now, when I see people, buyers, any of them I deal with, and you're talking about a 6.5%, I'm like, take that shit and run. I had a client out of Tennessee, ended up with a 5.4%. I think it's 5.4% on a second home. on a second property. I was like, damn, that's good, bro. That's freaking good. No, let me take that back. It was 6.25, but that's still good. We're seeing 6.25 on primary residence. He's a 6.25 on a second home. Still good. So when you talk about rates, don't look at it as if this thing is, you're just stuck in it. Honestly, I still believe if you can take advantage of the rates right now, take advantage of it. Because damn, just like gold is going up, just like silver is going up, Bitcoin explode and then drop down. Oh God, Bitcoin. Woo! Bitcoin, bro. Bitcoin need to stop doing this shit, bro. It really need to. But just like all of these other assets are appreciating, hard assets are going to appreciate. That's what Kiyosaki spoke about in Rich Dad Poor Dad. That's what he spoke about in Fake Money. We've seen it and we know it. That's what people were buying for. These things are going to they're going to shoot through the roof. So I feel like if you can get it at a good rate, get it at a good rate. Just make sure you can afford it, you can maintain it, because it's never about what you cop. It's always about what you keep, no matter how you run with
Your situation.
But roughly,
That's good.
all right, but I'm going to parry with you on that. But still, 80% of outstanding mortgages carry rates below 6%. 80%. So it's improving, but that's still the lock-in of interest rates. But
it's only going to go in one direction. Like, it's not going that whatever the ratio is, it's getting more skewed to people with higher interest rate mortgages. Again, I don't want you to have a high interest rate mortgage, but it just means this whole idea of like, I can't let go of my 3% is melting away, and that's what's going to change the housing market as long as you continue to get more supply on the market.
Yeah, but those places you mentioned that are skewing the data is not a supplier's market. I mean, New York, there's not a huge supply of new homes in New York.
And there's never going to be a huge supply of new homes unless you demo a building and you build brand new. But look at those rates, though. Those rates, people keep buying based off the rate. I'm going to tell you, this rate conversation is always one part of the deal. It just means your bill that you pay every month and the interest they charge you, right? I think equally, I won't exercise that rate unless I'm buying in an area where the appreciation is going to make it worth it. And there's still areas like that. Georgia and Atlanta, I know we've got pockets outside of the city and in the city that I would say buy at before you even turn around and buy some of these raggedy ass houses that they try to sell you closer to the airport or on the south side, some of these other places. Unless you're going for a real estate portfolio, unless you're trying to buy something for a real estate portfolio. Don't get it twisted. A lot of people love buying down there and living down there. But let's be for real. If I'm going to do a 6% and I know I'm going to possibly be staying there, you see already it's going up to 8 years average. Why not buy somewhere where it's going to appreciate at the same time? Why not? I believe that this is my personal opinion is that the market is going to shift so fast. It's already shifting as a buyer's market. But when the inventory starts pouring in, if you're ready and you're just sensitive to it, you're going to get a deal. You're going to get something. These owners, they don't want to hold these houses this long. They don't want to. I've seen them come and go off the market. I had one where we had 5 offers last year and it fell out. He said, man, I'm just going to turn it into a rental. And he turned it into a rental, got somebody for it immediately to rent the property. My logic is, dude, keep it. Or do an owner finance, buy here, pay here type of thing. Something creative that will allow you to cash flow a lot more. Do a pad split. Pad splits are good. I got a friend that in the real estate space, he's doing a pad split on properties. Good. So there's tons of ways to make money right now, and there's going to be more ways to do it. You just got to buy it right. Those days where people just buy everything anywhere, you guys got to stop that.
I know, forget about New York. New York, I mean, like,
stop talking about New York City.
How about Connecticut?
No, not Connecticut either.
Connecticut.
How about California? About, like, Indiana.
That's what I'm saying. There's a bifurcated market here, obviously, and it depends on where you are.
I don't think it's all about letting the mortgage go, though. People love their low mortgage rate, but because of that low mortgage rate, especially, for example, if they got it during COVID, then they were really buying price-wise at the top of the market.
Yeah.
So if the market is softening and these folks are coming in trying to get a 6% mortgage and they're saying, well, I can't afford this house at 6% at the price that they're asking, and they're lowballing a little. I do see that here in New York City. The people who are really stuck on getting their price end up taking their place off the market. The people who are flexible, probably even willing to take a loss, need to move for a life event or whatever, they're the ones that end up selling. So I don't know how much that unlocks the market, because there are enough people that are going to say, I don't want to take a hit on this like that.
Well, we're talking about, if people stay in these homes, you're talking about roughly a $38 trillion wealth transfer globally over the next decade. Yeah. And there are many reasons why people sell.
So over what they mean by that also, over the next decade, as the baby boomers begin to die out more, some of them are starting to die right now, okay? That wealth, because they held the largest amount of wealth in the U.S. up to this time, that wealth is now going to go to their children and their children's children. A lot of these people don't want to deal with the property. A lot of them are going to turn around and just sell it, either for what they can get. Some may try to get a little bit more, fix it up. They try to be some investor like. I see that all the time. Yeah, they're going to do this, then probably get the investing bug. But either way, it's going to flood the market with more inventory. And if you are able to actually snatch up stuff or get in the position where you can buy it and then resell it, you can make money in this upcoming market, this upcoming play. Okay. Join the Georgia real off-market property list. The descriptions in the link is actually in the main description. And but it's worth it to me. It's worth it, because when we go looking for some of these deals, always I find people that just don't want their stuff. And you wonder, like, dude, why don't you want this? Like, damn, this is a piece of land. Granted, sometimes it's landlocked, but I can pay somebody to park their car here. You know, you can charge somebody to park their car here, but hey, they do what they do. But as that happens more, as more of that wealth transfers over to the children of these baby boomers, these guys are going to liquidate it and sell it. To me, when I look at society right now, a lot of people, and it's weird, back probably about 2016, 2017, it was always about buy and consume. I'm seeing people want to have less. They want to have less. They want less responsibility. They just want the money. They're just concerned with having some reserves in their account to do whatever they're going to do. Who knows? But at the end of the day, they sell it. And I can't drop the belief that assets make you money. Liabilities take money from you. And this is the thing. So because they don't understand assets, because they don't understand what's going to take place, they just want the green, which is being devalued left and right. Like, that's why we can only get a certain amount for our dollar out of bread. Like, people don't get it. These assets are always going to go up. Silver, gold, man, I've been buying that shit since it was young, since I was freaking, my wife told me, stop, you need to go buy silver and gold. I start buying it. Bullion, jewelry, Bitcoin. If you just focus more on assets, you don't even got to get real estate. I tell people, buy REITs. Find and investigate, do some research on a REIT program, REITs, that would actually real estate investment trust too, that will actually, that you understand first, you like that model or you like their business model, put your money there. Because it's always going to give you some type of you're always going to get dividends on it. Most of them, all of them, you get dividends on them. Sometimes I'll see a dividend from a REIT every freaking month. I'm like, dude, I need to buy more of that stuff. Because the more of those things you add over a period of time, your checks become pretty comfortable, you know? So there's multiple ways to get involved in hard assets. And these assets, don't let this shit fool you. Don't let them scare you on this. Because I'm always of the belief, it doesn't matter how the market is popping. You're always going to, if you're actively in it and you're interested, you're always going to bump into somebody that just got to sell their shit, and they want to sell it really, really fast. Really, really fast. Let's see what else they got to say.
And move. It's a death of a spouse. It is you need to move to assisted living facility. You have to relocate for a job. But one of the areas you mentioned Connecticut, New Haven, Connecticut, has one of the longest average ownerships among metro areas, 13.4 years. And Merced, California,
the pizza, guaranteed.
Really?
Merced had the tenure rose the most from the prior year in Merced, California, 34% to 12 and a half years.
Yeah, people love it. They love it so much they want to stay for over 10, 12
I can't imagine
years.
people want to move into
Oh
New
my
Haven.
gosh.
Trust
They
me.
want to go to Merced.
Home owner tenure rises fourth quarter 24 to 25. California, Merced, 34%. Wow. Florida, 18. I can see Florida. Man, I want to get back to Florida, bro. I ain't gonna lie. I love Georgia, but I'm starting to really just want to get back to Florida. I just want to be at the beach. I want to go to the beach when I want to. I want to stream and see some shit outside my window that's a sea. I love Georgia. It's so much money making down here in action, but still, bro.
They may want to go to Merced.
Quickly, Dagan, you talked about that $1 trillion in wealth that's being held up, which is why, and I think maybe it's been Steve Moore who said this, but correct me if I'm wrong, where you want to see home price increase slow but not totally collapse because there are so many homeowners who are sitting on wealth, and you don't want to see that wiped out if prices really start to fall. So similar to how we were talking about inflation earlier, you want wage gains to go faster than the price increase of the house, but you don't want the total house to actually fall in price because you have a lot of wealth tied up in there. On a similar story, I'm wondering if people are selling, Dagan, you've talked a little bit about this, and I was one of them, who sell for other reasons, because home insurance is no longer affordable. Property taxes are going up, even though the value of the home is going down. The neighborhood is changing. And so you're willing to take a loss on a property because all of the extra peripheral issues are no longer affordable, even if the house still is at a 3% mortgage.
DIVORCE.
I know what that
I can get
spells.
in here because Charlie.
I was just going to say that,
funny.
most people that are sitting on houses outside of New York and all these other places that skews the numbers are sitting on profits. So they're selling off their highs. They're not selling at a loss.
Yeah.
I mean, that's something you have to keep in mind.
If you
Where there's
bought during
real
COVID at the peak,
Not,
I think it depends on
maybe,
the area.
Maybe
It depends on the area. There are some houses that people paid who were bought during COVID that even now is still high. It's like they paid premium and then it went up past that. So it just depends. You can't. I think that's a general statement.
but
maybe outside of Florida. I don't know. Florida, you had some.
Florida's
up
been
crazy.
Lately-
That's what I
Florida's
mean.
different.
If you
Florida
bought
had some
during-
appreciation and then it came down.
It's coming down, though.
Yeah, look,
I
they
know.
got housing prices do have to come down. The ratio between incomes and housing prices
Yeah.
is so out of whack. The idea that prices aren't going to come down a little bit, they can still come down a bit for a lot of people, and they'll make a very tidy profit. But
Agreed.
it's going to take forever for even in a Trump economy, it's going to take forever for incomes to catch up to the starter home prices right now. It's absolutely insane.
We need a little bit of relief on the rates. I think the president is right about that.
There are hardly any starter homes. So when I'm saying this, the concept of a starter home has actually changed. I remember when I first came to Georgia, a starter home, my mom bought a townhome as an investment, paid under $100,000 for it. That same townhome, dude, this thing ain't worth this much. $250,000, $300,000. So that would be ideally a starter home under $100,000. Husband and wife couple. I mean, me and my wife, we lived there when we first got married. Good place to cool. I said, Mom, I'll pay the rent. We here. Boom. But it's completely different now. These starter homes, and if you can find a good starter home community, that's a different thing. That's another thing. Probably find some one-off resales. These builders aren't building them like they used to, They aren't, unless you're somewhere and you're in rural Georgia or rural wherever it is, and the land is super freaking cheap, and they just want to sell it. They will do that. They'll sell it. They'll build that. They'll keep it really low. But when you get closer to the city where the money is, where people actually making dough or they're going to work somewhere or they're frequenting the city, we don't see them as much. Hardly any.
Not saying that his calculation is 100% correct. But
short-term rates don't control the mortgage.
No, I know. But just to put it out there, it looks like even with the numbers and the data that we have, that the Fed could cut potentially. It's not enough for this market, but 2 times this year. I think it would balance things, help balance a little, as long as the bond market doesn't go crazy.
Might make it worse if the bond market if inflation comes back and 10-year sells off, then your mortgage rates are more expensive.
Right.
So you got to be careful with that.
I said if.
Listen, Scott Bessent keeps trying to talk him out of the short-term rate and lowering the Fed funds rate. He said this, and he's
go for the 15-year mortgage rate. Go for it. I'm gonna cut this off right now. Go for the 15-year mortgage rate if you can. If you can't go for a 15-year mortgage rate, understandable, but go for it if you really can. Really, really go for it. That's just my take on it, man. All right. Shoot.